Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong monthly structure level. In fact, what we know is that from here, all these previous rejections to the downside were created. Then the market broke above that zone. And what we know in the market is that a previous level of strong resistance, once it is broken to the upside and retested, becomes support. And that is in fact exactly what the market did here. It retested the level and respected it as support. However, the market then broke back below the level. And at that point, again, the previous support became resistance. And the market again respected the level as resistance, creating this rejection candle. However, the market has now broke back above the zone. So again, this horizontal level is currently acting as support. Now, if the market will again break below the level, at that point, the more the market breaks a structured zone above and below, at some point the level stops losing, essentially loses its relevance. So it will be very important to see what happens right now from a monthly closing perspective, because if the market now closes back below that zone, it could easily bring this price lower. So let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. We had first the creation of this M pattern. The market then tried completing the M pattern, creating this rejection to the upside, which is exactly what you would naturally expect. And at the moment, the market is then rejecting the level to the downside because it found resistance on the daily time frame. In fact, the level that the market here reached from a daily perspective is exactly the level that you would expect the market to reach. We had a very strong impulse. The nearest previous daily support turned resistance was exactly here. The market went and tested exactly that level and currently is in the process of rejecting it to the upside. So everything as you would naturally expect in this kind of situation, because when you have a downtrend, in an ideal downtrend, you have the creation of lower lows and lower highs, in which the market goes and it retests the previous support term resistance levels, which is exactly what the market has been doing so far, retesting these levels and continuing to the downside. So from a daily perspective, everything is quite clear. We can notice, however, that we haven't yet broken below the previous level of support. In fact, the market is currently trying, as I'm speaking, to break below the zone, but unless we will see an impulse to the downside and a close below the support, only at that point that previous support would become resistance. Now, before we dig into more details here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and let's look at the data precisely for the JPY. Now, if we're looking at the JPY, what we can notice is that with the last reports, net positions have been increased. We went from minus 29k to plus 54.6k net positions. Now, what this shows is that institutions went from having a negative net positioning with more shorts than longs, with 120.8k shorts compared to only 91k longs, all the way up to having now 144k longs compared to only 89k shorts. So institutions have moved aggressively to the bearish side of USDJPY, because if institutions are longing JPY USD, they are essentially shorting USDJPY. So clearly institutions are shorting USDJPY aggressively. So there is no surprise that with this strong institutional shorting, the price has been moving to the downside. Is exactly what you would expect. So if the market will break below the support, and we still don't know if, because if the market remains above the support, it can easily create a double bottom. But if the market breaks below the support, that is where things get interesting, because a break below would make this previous support become resistance. And on the retest of this previous support turn resistance, that is where there is an increased probability to see even more institutional shorting, more than what we have already seen that is happening. And at that point, we would have an even increased probability of seeing a potential rejection to the downside below the level. So if we do get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential rejection to the downside for the market to complete this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the Quant Analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools. Here, you will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show, so essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.